Welcome, and thank you for joining us today to learn about what the new federal withholding system will be for 2020 and what is going to change on the Form W-4. My name is Rachel Yanchis, and I'm a Senior Marketing Specialist at Viventium. We're excited to have our Consulting Director of Compliance Services, Yonina Shineweather, CPA, and our Director of Compliance Services, Malka Trump, CPA, CPP, this afternoon, as they discuss critical changes to your client's federal tax withholding process for next year. You'll receive your certificate of completion for this course if you attend today's webinar fully, which will entitle you to 1 CPA credit following the webinar. Before I hand this over to Yonina, I want you to know that we value your feedback from this session, and we look forward to sharing with you more insights that will help you successfully grow your business. We'll be recording this session, and a link with the recording will be posted on the webinars section of our website. To learn more about Viventium and our payroll and HR services, check out www.viventium.com, and for other new and exciting webinars, you can register at viventium.com/webinars. Yonina, we're looking forward to this session, and I'll hand it over to you to get started.
Thank you so much, Rachel, and welcome everyone to this afternoon's webinar about federal tax withholding in 2020 and helping your clients navigate with what is basically probably one of the largest, farthest-reaching changes to payroll tax processes since 1986, maybe, for those of you who remember the Tax Reform Act back then and its sweeping changes. I mean, we've had big things going on in payroll. We've had the Affordable Care Act, ACA, but even that was limited in terms of its applicability. It applied to large employers, full-time employees. We have some changes happening this year to the overtime threshold, but again, that only applies to certain employees who fall within a certain salary range and meet, of course, all the duties tests. And Viventium has conducted some webinars around that. We'll be holding some more about the overtime threshold changes. But when we talk about the 2020 federal tax withholding, this is a change that affects every employee of every employer, of every industry, of every state in the United States. It's really big, and it's not simple. It's pretty fraught with a lot of complexities, and we're going to be taking, a very good magnifying glass look at them, because you as CPAs are coming from two different sides of this. Number one, you're going to have your individual clients who are going to come to you and say, well, I just started a new job, here's this new form, or I'm in my existing job, but my employer gave out this new form, or I want to make a change to my information, and I went to my payroll department and they gave me this whole mini tax return that I have to fill out. What do I do? So that's like, one of the kinds of questions you'll be getting from the side of the individuals. And I'm sure many of you are advising your corporate clients, your businesses, about their payroll. If you're not doing payroll for them yourselves, but you might be, their source for payroll information, and they may be a little confused around this new way of doing things. Now there are two different tables for calculating federal. It's not one set of tables, and now two sets of tables. There's a whole new filing status. So there's a lot to talk about, and we're going to be zooming in on that today. And just a couple of administrative points. As Rachel mentioned, today's webinar is being recorded. The recording will be available. And this is meant to be an interactive webinar. Kind of think of it more as a seminar. And on your toolbar, you'll see a place where you can actually type in questions live, real time. And I do keep my eye on that toolbar as I go along. Please feel free to type in questions. Those of you who have done webinars with me before, I always say, if there's a question that's important enough for you to ask, if it's something that's not clear to you, then it's probably not clear to a lot of our listeners today, and we're doing everyone a favor by being the one to ask the question. I will try to answer the questions as we go along. As well, if there's any time left at the end, we'll try to do a little bit of a question answer session. So let's maximize the time and maximize the information, the practical hands-on information that you can take out of this. Couple words about legislative background. So where did all this start? This all started back in the TCJA at the end of 2017. So if this law was passed, setting up two sets of tables and a whole new way of collecting data in 2017, why are we only talking about it for 2020? Well, the answer is that it was passed at the end of 2017. Obviously, the IRS did not have enough time to actually make any changes for 2018. they were pretty focused on making those changes effective 1/1/2019. And they worked on it, but it was so complex that for them to come up with a new form and new tables and new systems for doing things, they just could not be ready for 2019. And so it was all postponed until 2020. And I have to really, give credit to the IRS in this case. We may have our personal opinions, but I think everyone who looks at the way they handled 2019 in terms of preparing for this was really good. They took a lot of input from the employment community, including from payroll services such as Viventium. They actually conducted a private contracted think tank study, which I participated on behalf of Viventium in. They showed us drafts, they asked for our comments, they listened. They issued 2 drafts during 2019, and they incorporated the feedback that we gave them. They've been very responsive. And, given the challenge of what they were asked to implement by Congress, they really did a yeoman's job of finding a middle ground between accuracy and complexity. At least that's my own personal opinion. And, I'll let you weigh in as we continue through this webinar. The basic goal of the legislation, as you know, was to, instead of having large amounts withheld as people paid as they went in the pay-as-you-go system, and then everyone getting these refunds at the end or when they file their 1040s, the idea was, no, let's put taxpayers' money in their pockets right away. Let's decrease the withholding, meaning increase their net pay, and therefore in February, March, April, or on extension, whenever they file, instead of having them get these refunds at that point, let's give them the money. Let's make their withholding more accurate. Let's make it actually reflect as much as possible what their tax liability on their personal returns is going to be, and thereby stimulate the economy by putting more money into taxpayers' hands up front. Now, the concerns from the employment community were that in order to make withholding more accurate, it was also necessary to increase the complexity of the W-4, of the withholding form, and ask employees to disclose much more information, which could entail and does entail privacy issues, placing a greater burden on their employers' payroll departments, because now that the employees are being asked to give more information, well, who are they going to come to with their questions? They're going to come to their employers with this long form that they've been given. And as you'll see, if you haven't seen already, the final Form W-4 is actually a mini Form 1040. It's almost like doing a little tax return. And throughout the session today, I'm going to be suggesting some best practices. So one tip I can suggest to you is if you are doing payroll for any of your clients in-house, I would suggest that you sit down with the final W-4, starting from today. We're going to do it together, but just go through it yourself. Put yourself in your client's shoes and figure out, what they're going to be grappling with as they begin to fill out this form. And if any of you are using a payroll outsourcing partner, such as Viventium, you want to check with your partner to make sure that they are indeed ready to implement the form. Or if they're not yet ready, we don't have too much time left, but when the target date is, ask to see their software mock-ups, their screen mock-ups of how you can actually enter all these new data items, and begin training your internal staff accordingly and adjusting your internal procedures. So the withholding methods, as I said, did stay the same for 2019. Means we still had allowances. We still had the exemption allowances on the forms of 2019. That doesn't mean, though, that employees and employers don't have to be aware of the changes that tax reforms have brought about. So it's not too late, even though we're in the last few payrolls of 2019, but you may want to advise your employers to encourage their employees, or if you're representing individuals, you may want to encourage those individuals to avoid unpleasant surprises at tax time, meaning the 1040, as we know from 2018, has changed. There are no more individual allowances, dependent allowances on the form, and yet on the W-4s that they're using this year, there are allowances. And so what employees really need to be doing is making sure that their withholding is as accurate as can be, and they're not going to have any unpleasant surprises of large balances due and potential estimated tax penalties at tax time. The IRS is encouraging everyone to perform what they call a paycheck checkup. to make sure that their tax is correct. And I've given you the link here to the IRS estimator tool. They used to call it the IRS calculator, and we were getting we were giving the IRS a lot of feedback that it was confusing, it was cumbersome, it was difficult to understand. And the IRS really did respond. They did a pretty good job of putting together a new tool, which is now called the estimator as opposed to the calculator. The link's there for you. And it is easier for clients to use, for employees to use. And they can use that to make sure that they don't need to do any, adjustments now at the end of the year so that their 2019 taxes will be as accurate as possible. There's also a frequently asked questions there, which you can refer your clients to. There are specific target groups that are prone to having reconciliation issues, meaning they may actually have very large refunds if they don't do a checkup, or even worse, they may owe balances of tax at tax time. And therefore, the IRS has given these target groups to income families, people who themselves have more than one job at the same time, people claiming the child tax credits with older dependents, those who itemized in 2018, those who had large refunds or large bills for 2018, the complex, tax returns. Those are the people that are most needy of doing this paycheck checkup using the estimator. You can step through it. It's not bad. It's an okay thing to refer people to. It's not as bad as it used to be. But in 2020, this will be less needed since the 2020 form actually forces people to be more accurate. And, we have, again, that classic conflict between accuracy and complexity, where the IRS, and we'll take a look at the tables in a minute, where the IRS is asking now for more information. So the form has gotten more complex. At the same time, though, it will yield more accurate withholding, so less adjusting on the side will be necessary. Now, the new tax tables are here. This is what you're seeing in front of you on the screen. And as you can see, we now have two sets of tables for computing federal withholding. So again, those of you who are doing any type of in-house payroll for your clients, you want to make sure that you're supporting both of these tables. The one on the left is for people who did not give in 2020 W-4s. The one on the right is for those who gave in 2020 W-4s, but even those who give in 2020 W-4s, there's a little box, we call that the magic multiple job box. If it's checked, they use the right tables, and if it's not checked, they'll use the left tables. Now, this is not just mumbo jumbo. We're gonna actually see what these boxes mean and what it's all about. But I just wanted to show you the bottom line. This is where we're heading. Tax calculations are gonna be done very differently in 2020. Does that mean that all workers across the country have to complete new Form W-4s? No, a resounding no. That was originally suggested by the IRS. Actually, some payroll services would have kind of preferred that because it was difficult for them to reprogram their legacy systems. Viventium didn't have that issue because we have an extremely flexible system. We'll talk about that a little bit later. But the IRS did not require did not require all employees across the country to give in new forms. There are two sets of people that need to give in new forms. A, anyone who is beginning a job on 1/1/2020 or later must use the new kind of form. Even if you onboard them now, I know some employers would love to do all their onboarding now, get everyone and give them the 2019 forms and have them start work in 2020. You can't do that. If they're being hired to work in 2020, they must, as of now, already submit a W-4 for 2020. So that's one group of people, new hires. And the other group of workers that must give in a new form are those who want to make any change to their withholding after 1/1/2020. So if they want to, change their marital status, increase the additional amount they want withheld per period, or just continue claiming exemption, because the exemption, that stays the same. It still expires February 16th of every year. So if someone has a W-4 where they're filing exempt, meaning don't withhold for any reason, and they will need to give in the new form in 2020, and they will need to do it on the new form 2020. They cannot just submit a 2019. Those are the two groups of people who must give in new forms. But all workers are being encouraged by the IRS to give in new forms in order to fulfill the purpose of TCJA, which is to have more accurate withholding and lower refunds, more money in the taxpayer's pocket up front. And employers are allowed to encourage their employees. They're allowed to put payroll stuffers encouraging them to complete a new 2020 form, or payroll stub messages. As a matter of fact, you'll see here on the handouts, you have a little handouts bar there. So first of all, there are the slides. We've attached to the slides here, so you'll have them for your reference. We've also given you a payroll stuffer, the Viventium branded payroll stuffer, which you can feel free to use and distribute to either your clients or to businesses that that you're doing services for, and they can use that to inform their employees, new ones or existing ones, of the changes to withholding, and there's some useful information there. So everything's changing. Here's the new form, and you'll notice even the name is changing. It's now called the Employees Withholding Certificate. Compare that to the old one, which is just a little slip of paper down here at the bottom. It used to be called the Employees Withholding Allowance Certificate. So as you know, allowance has become a bad word. It was outlawed by the TCJA. There are no longer the concept of withholding allowances. Instead, it's now called the Employees Withholding Certificate. And this is it. This is the Employees Withholding Certificate, the W-4 for 2020. This is the final form. The drafts had been issued, had been studied, had been chewed up and commented upon, and now we have them in front of our eyes. We have the final form, and we're going to zoom in now on this final form and go through it carefully. And again, feel free, those of you who have joined in progress, to use your toolbar to ask any questions as we take a look at it. So let's keep them side by side. Here's the old form on the left, the new form on the right. So you'll see just some editorial stuff. They used to say, your first name and middle initial. Now they're just saying first name, not your last name. Okay, that's, your social security number, that's just editorial stuff. It used to be called home address. Now they're just saying address. And there's still that little reminder to employees to check their name. But you see on the old form, it used to say if your last name differs on from that shown on your social security card, go check it out. Now the SSA is getting a little bit more proactive about their name and social security number mismatches. So it just says, does your name match the name on your card? Even if it's the first name or a middle name or a junior, senior, second, that would all be encouraged by that little box over there. They're not asking you to check here. They're just saying, call the SSA or go into your office and try to get your information corrected so that you can get credit for your wages. And now we get to the first real meat and potatoes change. If you take a look at line 3 over here on the left of the old form, we have 3 marital statuses, right? Single, married, and married but withhold at a higher single rate. Well, they've juggled that around and they've added a new one. In box C of the new form, we have 3 checkoffs. Single or married filing separately, which would be the equivalent of the first and the third box, right? If someone checked off single or married but withhold at a higher rate, they would now check off this first box. And the second one is married filing jointly or qualifying widower. I'm hoping this is not going to confuse people because qualifying widower never used to appear before. This is the equivalent of the second box. That, in other words, the one that says married and use married tables for me, use the rates for me as married. And qualifying widower is not defined on this form. So again, you want to make sure you're familiarized with the definition because you may have clients coming to you asking you to define that for them. And then the new one, that's the present of the new form. We have a third filing status, which means a third set of tables that never used to exist before. And that is called head of household. And here the IRS actually gives a definition if you're unmarried and pay more than half of the cost of keeping up a home for yourself and a qualifying individual. Now, if your business client asks you, my workers are coming to me and they're asking me, am I head of household? Am I not head of household? A best practice for you to tell them they should not be making that determination for their employees. They can point their employees to the definition on the form, but in terms of actually helping the employees determine if they qualify as head of household, they should steer away from that. They should encourage their employees to turn to their own tax advisors for determining what their filing status is. I wouldn't put them in the position of being the tax advisor of their employees. It's just a no-win situation. So that is the first real change on the form, and that is the change with the new filing status. Now we get to steps 2, 3, and 4. All of those steps, 2, 3, and 4, are optional. Employees do not have to complete them. In order for a W-4 to be valid, it's sufficient to complete step 1 and step 5. Let's look at it a little more closely. Step 1 is the personal information, and step 5 over here at the bottom is just the, there it is just the declaration under penalties of perjury. They've made this a little bit shorter. They used to have a much longer, I have examined this form, much longer, look back here on the 2019. Sorry about that. They had a much longer certification down here. I declare I have examined the certificate, and they kind of shortened it. They just said, I declare that the certificate, to the best of my knowledge, is true, correct, and complete. That's they've simplified it. Obviously, if someone's declaring that, it means they've examined the certificate and they have to sign the form. So if someone comes to you and says, well, I'm just filling out step 1 and step 5, is that an admissible form, a form that can be used? Yes. You don't have to complete 2, 3, or 4. Now that said, if you don't complete 2, 3, or 4, realize that you may end up owing a lot of tax at the end of the year, which is not a pleasant situation to be in. You may be left with estimated tax penalties and have to pay extra more than necessary. So it is encouraged, it is advisable to complete whichever information of steps 2, 3, and 4 apply to you. That would be basically the answer that you want to give. Step 2 is made for people who are working more than one job at a time or whose spouse works. Now, why is that so important? In the olden days, before 2020, if someone had a multiple job situation, they did have a worksheet in the W-4 that they could use. It wasn't mandatory. It was buried there and among the pages of the W-4, and they could fill it out and calculate any additional withholding. But let's as accountants, let's just for a minute pause and wrap our head around it. Why is additional withholding even necessary? Each job you could fill out a W-4 and have the withholding. The answer is because the standard deduction of the tax return of the 1040 is built into the tax tables, which means if you're only working one job, then your employer is going to use the tax tables. You're going to get your standard deduction taken into consideration. Your withholding is going to be pretty good. But if your spouse is also working, they're using those same tables, which again has a second standard deduction built in. Or if you yourself have more than one job simultaneously, again, your second employer is using, again, that standard deduction. But you only get one standard deduction per household, not per job and not per worker in the household. So therefore, we need to have additional withholding put into your W-4 to compensate for those extra standard deductions that are being taken into consideration for each of the additional jobs in the household. So that used to be left to the employee's discretion if they wanted to do that worksheet. It wasn't on the face of the form. And now what the IRS has done, they've moved that information. They've figured out the best, most elegant, least invasive way possible, because they've been mandated to actually account for it in not just to leave it up to the employee, but to have it there for the employee to fill out right on the face of the form. So the IRS has said, if you have more than one job at a time, or you're married filing jointly and your spouse also works, then you have to know that, first of all, and you have to do one of the following, or at least you don't have to, but you're recommended to do either A or B or C. They are mutually exclusive. Do not do more than one. Pick which one you want. So A is actually the most accurate and the most private, meaning you as a worker just go to this estimator, the one I talked about before, the W-4 app, and you go through the few loops and hoops that the IRS puts there. You put in your information, and your job, your spouse's job, I say this, I think there's a social policy here. It actually forces spouses to talk to each other and share their income information. But, that's the joke in the industry that was really what was behind the TCJA. But you're going to go to the estimator, you're going to do that calculation, and then whatever result comes out, you're going to put it down here on line 4C, extra withholding. See that line all the way at the bottom? That's very reminiscent of the old form over here, which said additional amount to withhold. See over there on line 6, it was additional amount, if any, you want withheld from each paycheck, line 6. That now maps into line 4C, or step 4, line C, of the new form, extra withholding. That's still a per pay period amount. And I actually like what the IRS did there. Is in the old one, it used to say any additional amount you want withheld from each paycheck, which was kind of ambiguous. Paycheck, well, what if somebody got more than one paycheck? What if someone got, 2 paychecks in a week? Did we have to do the additional amount on each? So here they've made it much clearer. It's just each pay period. So that means once a pay period, this is the additional amount that you want withheld. So that would be the most accurate and the most private, because your employer doesn't have to know anything. There could be 10 reasons that you're putting down extra withholding. They don't have to know that you're working another job. They don't have to know that your spouse is working. They don't have to know anything. You're just putting down an extra amount. And that is certainly the most private. It's also the most accurate. However, it is somewhat complex. And the average worker in the United States may not want to have to sit and, go through the estimator. And I do suggest that, as an accounting professional, try it, go through it, and you'll form your own opinion about it. Like I said, it's not so bad, but employees, your clients may not want to be bothered with that. They don't want to sit with estimators. They don't want to put their personal information online, even though it's anonymous. They may not want to do that. So the IRS gives them another option. Option B says, use the multiple job worksheet on page 3 of this form, of the W-4, and that will also give you a result for additional withholding to put on box 4C. So this is kind of like a compromise. They're still not telling their employer too much information about their second job, but their employer might be able to reverse engineer, and people might not want to do that. What do I mean? If we take a look, this is the multiple job worksheet, multiple job charts over here. And what these charts tell you is, let's say you have 2 jobs in your household, you and your spouse. So take the higher paying job, find them along this side. Take the lower paying job, find them along the top. And the intersection of where those 2 jobs meet, that is the annual amount you want withheld additionally. And then, of course, divide that by your number of pay periods and put that on line 4C. So if the employer is curious enough, they actually could go back and find out how much you're earning, because if they see a number that's $6,570, they know that one of your jobs falls into the 70 to 79,000 range, and the other job, the other job falls into that, and they know how much they're paying you, so they can say, oh, either you're working another job, or your spouse is working another job, or whatever the case might be. So, employees might not like that option too much. It's a little bit less private than using the estimator. At the same time, it does provide them with a little bit more information. It's not so open-ended. Go use this online calculator, and so that's option B. And that's use the multiple jobs worksheet on page 3 and enter the result below. And the IRS says that will give you roughly accurate withholding. Okay, not for sure, not completely, not as much as step 1, but roughly. By the way, what do you do if you have 3 jobs in the household, not just 2? So the IRS says what you do is you just add the 2 highest jobs together and then find them here, and take the 3rd job across the top and find the intersection. That's the first step. And then take the 2 highest paying jobs separately, the highest and the 2nd highest. And again, find an intersection, add the 2 amounts together, and then divide the whole thing. So there's actually a worksheet on the form that instructs that. It's a little bit more complicated. Again, as accountants, it's not calculus. We should be able to help our clients through that. But this is all brand new. These tables are all brand new. This whole process is brand new, and it will take some getting used to. Again, if anyone has any questions, please feel free to ask as we go along. Now, the last step, which is the least accurate, the last option the IRS gives you, and they say, if you only have 2 jobs total in your household, then check the magic multiple job box. If you remember, I mentioned that before when we looked at the tax tables. That's this little box over here. And tell your spouse, or if you're the one working the other job, check that box on the other job also. And this will work if your 2 jobs have roughly similar pay. Otherwise, you might end up being over withheld. And put a check over there. Now, what does that magic checkbox tell the company to do? Let's go back to the forms. Here they are. Use this table if the form is a 2020 form and the magic multiple job checkbox is checked in step 2, is checked. And if you'll notice, these withholding tables are higher, right? For the corresponding brackets, they result in higher withholding, higher tax. And this is the shot in the dark, more or less simplest option. It's the least private because you're actually disclosing to the employer that you do have 2 jobs in your household. At the same time, it's the simplest. You don't have to use any estimators. You don't have to do the intersection of this job and that job and adding and worksheets. Just check the box and let the employer or let the IRS do it for you. So now if you're doing payroll for your smaller clients in-house, you want to make sure that you're looking carefully at W-4s, seeing which boxes are checked. And of course, an employee has the option to change it mid-year, and then corresponding your system to be using the correct tables. If the box is checked, it's the right table. If the box is not checked, it's the left table. Now, there's a tip here because there's something a little confusing, and you might want to be able to advise your clients about this. If this is the W-2, if this is the W-4 that is the highest paying job, then you go on and fill out step 3 and step 4. So notice that instruction over there. Complete step 3 and 4 for only one of the jobs. Leave these steps blank for the other jobs. And it's most accurate if you use steps 3 and 4 for the highest paying job. So now let's say we have John and Jane. Okay, and they're both your clients, husband and wife filing jointly. John says, how do I fill out my W-4? Well, I have the higher paying job, let's say. So you tell John, okay, which option do you want? No, I don't want to do any estimators. I just want to check off this checkbox and let the IRS do it for me. I don't care if my employer knows that my wife works, doesn't bother me. Let's do the simplest thing. Okay, so John checks off this box. And then you say to John, okay, so now you're going to fill out step 3 and step 4 on the new form. Great. Now, let's say Jane's job changes. So the information that they're going to be putting down for other income, or let's say there's a new certificate or a bank account or interest or something in their financial situation changes. Again, it's going to be John making the changes on his W-4 because the information, he's the higher paying one, and the information is being filled out on his form. And it's kind of interesting because you have a lot of companies, employers, who are going to be seeing an increased volume of changing W-4s, even though the employees themselves may not be having changes to their withholding information. But if their spouses do, or if their household does, that may be prompting them to give in new W-4s. So it's kind of interesting. Since there's more information being included on the W-4, companies can actually expect to see a higher volume of new W-4s being submitted throughout the year. So it can get a little complicated, but again, steps 3 and 4 are supposed to be only completed for one job, and preferably it should be for the highest paying job. Now, question for you. A client might ask you, can I check this box if I just want higher withholding, even if I don't have a multiple job? Let's say I'm the only one working, but I want to make sure that I'm withheld. I have other things going on in my life, or you may actually advise clients. And the answer is yes. You don't have to have a multiple job to check this box. If you want the higher withholding tables to kick in and to cover you for other things, other income, and you don't want to disclose any other income elsewhere on the form to the employer, so you can go ahead and just check that box. The IRS says that's perfectly fine. That's a tip. You are allowed to check the multiple jobs box in order to use the higher withholding, even if you don't have a second job. Now, again, I want to point out something that's confusing. Both jobs have to check this box. You and your spouse, if you're taking this method, again, that's why you have to talk to each other. You have to decide what you're doing on your W-4. I'm checking box C, so you have to check box C also, right? Both ones have to check the box, but only one of them completes steps 3 and 4. There's a distinction there. Okay, that's an important distinction. Now let's take a look at step 3. By the way, before I want to take a step back and do something a little bit lighter for a moment, and that is, what about the other W-4s? There's the W-4 SP and the W-4P. Right? Now the SP is the Spanish version. The Spanish version is going to have, that can be used for Spanish-speaking employees, workers, and it's going to have all the corresponding changes. The IRS has not yet released the final. They're saying sometime during the coming week. So the most recent we have is this draft as of September 3rd. The W-4P, which is for pension withholding from pension distributions, the IRS had originally said that they were going to issue a draft in September. They never did. And the latest talk, again, this is non-confirmed, but what we're hearing through the grapevine is that the W-4P will probably continue to be the old style with allowances on it. They're probably not going to have time to revamp the W-4P. So those of you who have clients that have pension distributions, we have to, still hold on for the final word, but it looks like the W-4P is still going to have the old version on it. Okay. I want to move on to step 3 of the form. And again, this is optional, but it will help to fill it in. Step 3 is meant to be used for the child tax credit, that $2,000 a year for children under age 17, or the other dependent credit. For those who don't qualify as a qualifying child, you may still get a $500 credit for them per year under TCJA. And so you put you multiply the number of children by 2,000, put the total here, number of dependents by 500, put the total here, add the amounts, put the total on line 3. Now, what happens if there are other credits? Let's say the employee has education credits or foreign tax credit, any other type of credit that they want to claim. There's no line for it here. The IRS says, it's okay, you can still claim it. Just add it in your mind, on a little scrap paper, do it in Excel, whatever, and put the total on the right side in line 3. So it's okay if the total here on line 3 does not equal the total on the left. It's okay if it's higher, because it's allowed to include other types of credits as well. However, if the employee, if your client puts amounts here and doesn't put the total on line 3, it's unclear what the company is supposed to do. The IRS has said they're undecided what you should do, and it's advising companies to say, well, if somebody gives you child tax credits on the left but doesn't put it on the right, consider asking your employee to clarify if it was left blank intentionally. So that's important to remind your clients that if they are claiming credits, it's not enough to just put them here on the left. They should remember to total them and put them over on the right-hand side as well. That's very important. That's step 3. Now, what will that do? If you put, if the client will put credits here, if you tell them to put credits here, that's going to reduce their withholding, and it will increase their net pay. And also, something important I want to point out, this is not a per period amount. This is an annual amount. So if you're calculating taxes, obviously everything has to be converted either into all annual or all pay period before you begin to apply tax tables. But this is, you're supposed to put the annual amount here, and computerized automated systems such as Viventium will make sure, of course, that everything is handled annualized properly and then de-annualized properly. Okay, let us continue to the rest of the form and go on to step 4. Step 4 says, and I don't know why the IRS put the word optional here. Really, steps 2 and 3 are also optional. I think they put the word optional personally because this is like the scariest part of the form. I think employers may see like other, employees, I'm saying workers may see other income. I'm supposed to tell my employer what my interest is, what my bank accounts are. Like, it's kind of a scary thing. So I think the IRS purposely put that word optional there just so that people shouldn't get too scared and, and balk at it. But again, it is optional. These are for other adjustments, and they move in kind of different directions. Line A is other non-job income. So interest, dividends, retirement income, anything that you don't want, anything that you're not getting withheld on in some other way, you can have your withholding done through payroll by disclosing that other income to your employer. Again, not absolutely necessary, but available. And by putting your total estimated other income on that line, the employer will increase your withholding accordingly. It's built into the withholding system that the IRS has outlined for employers, which of course is computerized at Viventium and perhaps in other, automated softwares they're using. And that will be taken into account. It will increase the withholding, decrease the net pay. That's line 4A. 4B goes in the other direction. If you expect to claim deductions other than the standard deduction, meaning you're itemizing and you have other deductions that that might affect your withholding, well, go use the Deductions Worksheet. And again, this is not really new. This information used to be in a worksheet of the W-4. The only difference is that it's now on the face of the form, and everyone's going to be seeing it and facing it and struggling with it. So here's what the deduction worksheet looks like. It tells you to estimate your itemized deductions, then subtract out the standard deduction. Here, by the way, maybe the first time you may be seeing it, but these are the standard deductions for 2020. And then the excess is what we're going to work with. Now, I'll ask you, again, put on your accounting think caps, why only the excess over the standard deduction? Why not account for all itemized deductions? And the answer is, as we said before, the standard deduction is built in to the tax withholding tables. Okay, so it's already in there. We need to just account for anything that's over, any itemized deduction that's over and above the standard deduction. And then if there's any other than itemized deductions, such as student loan interest, deductible IRA contributions, Schedule 1 adjustments, the new Schedule 1 of the 1040, that would go on line 4. And then the total is what you're going to put out on the front over here on line 4B. That'll be the total deduction. Now, this moves in the opposite direction of line 4A. In other words, 4A increases the income, so it increases the withholding. 4B decreases the income, it decreases the withholding. And then, as we mentioned before, you get to good old line 4C. And this was something we had really begged the IRS to change because I'm just afraid it's going to confuse a lot of people. And I was not the only voice saying this, but the IRS stuck to their guns on this one. This is line 4C is a pay period amount. So your clients say, well, should I put down like the total amount? I want, here I'm putting down my total income. Up above, I put down my total child credit. Here I'm putting my total deductions for the year. No, on line 4C, it's not the total you want withheld for the year. It is, and at least they bolded the words. We appreciate that. It is a pay period amount. You put down the additional amount you want withheld each pay period. We had a question that I want to address. The question is, are employees able to artificially increase exemptions in Section 3? So I think the question that is being asked, if we look back in Step 3, can you put down additional qualifying children? The IRS is silent about that. They did say you can check the box even if you don't have multiple jobs. They have not issued any guidance about whether you can increase the number of qualifying children. So I would say at this point it would not be advisable. If someone does want to increase the claims of, the deductions, the place to do that would not be there in Step 3. It would be on line 4B. You can estimate having additional deductions, and that would be the place. It's going to accomplish the same thing. If 4B gets subtracted, just like step 3 does. It's not that one is enhanced in any way or multiplied by anything in any way. It's just a straight deduction out of the taxable amount to calculate the withholding on. So I think it would be safer to do any additional deductions on line 4B and also more compliant rather than putting them on step 3. But thank you for the question. Now, what about an example? What about those employees who are not going to give in a new 2020? So they're still on the books as married in 3, single in 2. What do we do with them? How do we calculate them? Okay, so let's work through an example. Let's get out our pencils from behind our ears. And what about someone who is still married in 2, is an ongoing employee, didn't give in a new W-4? What are we supposed to do? So the IRS tells you what to do. First of all, go ahead and annualize. So they're weekly. Let's say they're married in 2, $800 a week, income of $41,600. Then the IRS says for each allowance, even though allowances don't exist anymore, but this person's grandfathered under a 2019 or a 2018 or a 2010 or a 2010 old form that they still haven't changed, use $4,200 for every allowance claim. So if they're married in 2, subtract out $8,400 to get adjusted annual wage, $33,200. Then look at the tables and use the left table, the standard one, because look at the instructions. It says, use these if the W-4 is from 2019 or earlier. Okay, so I'm going to do it. I'm going to take my $33,200, fall into this bracket over here, right? That's the 12% bracket. So I'm going to take the excess over the $31,650, that's $1,550 times 12%. And add the fixed amount, $1,975 to that $186 for a total annual tax withhold of $2,161, and divide it out by 52, and that's how I would calculate. So the trick here is we're using $4,200 for each allowance. Okay, any questions about that one? Let's continue. What about those who claim exemptions? So if we go back to our 2019 form, there was a nice little line there that said, I certify that I didn't have a liability last year and I don't anticipate a liability this year, and therefore I'm checking that I'm exempt. And as you'll see, there's no place for that on this form. It's as though exemptions went poof into the changing decade year, and they didn't. Exemptions still exist. But the IRS has said, just tell your employer that you're exempt by writing the word exempt. Take a pen, take a pencil, write it in exempt, or if it's a computerized system, there should be a checkbox that says, by checking here, you are certifying that you had no liability last year, you don't anticipate having any liability this year, and check there. That's so, it's kind of confusing because, most people aren't used to just writing things like that on the form. And the IRS has told you to write it in the space under line 4C. In the empty space under line 4C, just write the word exempt. And that is your certification of exemption. And remember, it does expire every year. So those who are writing it, who had an exemption for 2019, must submit a new form by February 17th. It comes out on the 17th in 2020. And those who do submit that must use the 2020 form. They must write the word exempt in over here. And they will need to renew it by 2021, by February 16th, 2021. What if you hire someone in 2020 and they don't submit a W-4? Well, we used to say withhold them as, right, single and 0. Well, you can't do single and 0 anymore. The IRS says withhold them as single with no adjustments. Just pretend they filled out a W-4 that said single, no other adjustments, no additional income, no deductions, no child tax credit. Just do it that way. That's what you do if someone does not give in a W-4 or gives in an invalid or an altered W-4. How about your NRAs? Well, we still don't have the final amounts because the IRS did not issue yet Publication 15 in its final form. We still have the draft. And as we may have thought, there are two tables again. For those who have not given in a 2020 or later W-4, These are the additional amounts. Now, don't write down these numbers anywhere yet because they're only draft. They're going to be adjusted for inflation. They're just not out yet. And for those who given a W-4 of 2020 or later, then use these higher amounts on the right-hand side. And where exactly on the W-4 to write NRA? Well, again, we don't have final guidance yet. It seems like anywhere on the form would be acceptable. Probably underneath line 4C is a good place to write it. Of course, it still does not apply to students or apprentices from India. That hasn't changed. But it's unclear exactly how an NRA, a non-resident alien, should be completing this new form. The IRS says that they will issue a new Notice 1392 for those of you who deal with non-resident alien situations, but it has not yet been issued. We're assuming it will be in the coming week or so. Check with your provider if they are ready. Viventium is ready. As I mentioned, our system was written with so much flexibility ahead of time that it could allow for this type of change to not be a crisis, to not be, the end of the world. We had a very smooth and simple transition into the 2020 calculations. We have online tooltips that users can hover over to explain what each new field means. Our client services teams are fully trained and really waiting to answer your clients' questions. Those of you who have clients with Viventium will have a very easy time of it. And our subject matter experts are here to provide insight to you as the tax advisors. And as every step of the way, Viventium was working closely with the American Payroll Association, with the IRS. This is just a copy of a letter of comments that we drafted. We were actually very gratified that the IRS was responsive, and they incorporated 2 of the suggestions we made in our letter in the final version of the form. And now I'd like to invite my colleague, Malka Trump, to show you a sneak preview, which is actually available already. Those of you who are using Viventium or your clients are using Viventium, these screens are up and live and operative and working. And Malka is going to step you through it and show you how it actually maps into the form.
Okay, thanks, Yonina. So as Yonina mentioned, at Viventium we're ready and our software is now up to date. So if any of our clients have employees that they're hiring in 2020, they will be able to have what they need to accommodate the new 2020 form, W-4, and have the correct withholding withheld from the employee's paychecks. So in front of you now is a screenshot of our new hire page. And as you can see under the federal withholding section, we have added a checkbox for the 2020 W-4. So if a client comes in here and checks this box, what it does is it opens up all these new fields. And these fields correlate to the new 2020 W-4. So our clients will be able to enter all the information and have the correct calculations. So just showing you how each field corresponds to W-4 quickly. As you can see, step 2, which is the multiple jobs checkbox. We have a multiple jobs checkbox in Viventium. So that applies to employee and they check that off in the W-4, the corresponding checkbox should be selected in Viventium as well. Moving down, step 3, where employees can claim dependent credits or other credits, though we have a field, a dependent credit field for that. And again, this is an annual amount. So whatever amount the employee fills out on line 3 should be entered into the dependent credit field in Viventium. Step 4A, other income. So if an employee expects other income beyond what they're making at this job, they would enter that on line 4A on the W-4. And again, that annual amount would be entered in the other income field in Viventium. And then line 4B is for those deductions beyond the standard deduction, again, an annual amount. If that is shown on line 4B on the W-4 the employee submitted, that would go into the deductions field in Viventium. And then our last field on this line is for extra withholding. And again, this is a per pay period amount, unlike all the other fields here. So if an employee decides that they need extra withholding beyond what the calculation is going to come from the system, then they would write that in on line 4C, and then that would be entered in the corresponding field for the additional amount. And then the last selection here is for those employees who did not have any federal withholding liability in the prior year and don't expect to in the coming year. So they wrote in exempt on their W-4. And in Viventium, you would select the don't calculate checkbox, and no withholding would be calculated for that employee. Now, this is different than the exempt option, which you see further up on the right-hand side. That would be selected in the rare case where an employee's wages are not subject to federal tax at all, and those wages would not appear in box 1 of the W-2, which is a very rare case. When an employee writes an exempt on their W-4, that's not what they mean. What they mean is, don't calculate any federal withholding tax because I don't expect to owe anything, but the wages should definitely be reported in box 1 of the W-2. So once you have all the information, you just save that new employee, and you can see here, our system gives our summary of what that employee has set up. This employee, you can see, selected the multiple jobs checkbox. They have their dependent credit in there, and they selected single or married filing separately. And of course, if this employee ever needs to make a change and they submit a new W-4 for 2020, an employer can easily come in here and select edit and make any changes that are necessary. So that's our sneak look at our new Viventium user interface to accommodate the W-4 2020. This is live now. Our clients can use it now. It's all ready. And I'm going to turn this back to Yonina to wrap things up.
Thanks so much, Malka. And I just want to conclude by giving you some additional resources. And this, again, is in your handout. The slides are there. First of all, the government resources. We have the final form, W-4, which was released last week. Publication 15T is still the draft, so the numbers are not accurate because the IRS has not yet issued the new publication 15T or the 15, showing the inflation adjusted numbers. However, the 2020 numbers are live on the IRS website. If you go and just go to irs.gov, you will find, and it's downloadable in an Excel format or CSV format, you will find the tables that can be used, and hopefully within the next week or so, the actual publications will be issued. And again, the newsroom facts are done very well by the IRS, and they're complete, and they're good resources for, giving your clients to just, if they want to read up on their own. So it's just a good idea to refer them to the frequently asked questions. And then we have our Viventium resources. Our blog gives a thorough treatment of the new face of federal tax withholding. We have a video and podcast for those who like to, see it in a different format. And we invite you to use those resources to reach out. For those of you who are accountants with clients at Viventium, please do feel free to reach out to your client services team, to our compliance team, directly to myself or to Malka with any questions that you may have as we move forward and actually gear up for beginning to use the new federal tax withholding in 2020. I want to thank you all very much for your participation today. And once again, for those of you who participated in this and stayed with us through till the end, we'll have a certificate available for your CPE credit. And I want to wish everyone a great afternoon and much success as you begin to implement the new federal withholding for 2020. Thank you.